Hello and welcome and good morning. You're watching Market Cafe. I'm Ankita Saxena and with me is Shrishti Sharma, and we're going to take you through all the global cues that you need to watch out for, and of course the cues that you need to keep on your radar before the start of D Street. But like I mentioned, the global cues that are coming in as far as Wall Street is concerned, a very mixed trade coming in, and a very muted trade day that came in. In fact, if you look at the numbers, Dow Jones was trading up 52 odd points, 0.1% uptick coming in on Dow Jones. S&P 500 saw though a cut of 23 odd points, and Nasdaq was down more than 0.5%. Now remember, Nasdaq has been rallying buoyed sentiment in the tech stocks. After that rout, we saw a comeback of the tech stocks, and then of course now we do see some profit booking that's coming in as far as Nasdaq is concerned. I mean, if you look at the stock futures right now, S&P 500 futures is up 2.7%, Nasdaq futures and Dow Jones is also trading nearly almost 0.2% higher. So a bit of an uptick coming in as far as the futures are concerned, and the traders are now looking at, of course, the labor statistics January non-farm payroll report that's due today, and also the data has been delayed because of the partial government shutdown that ended in 3rd of Feb. So this data was likely to come out earlier, but now this data will be coming out today. So that's something that we will be watching out for as far as the US market is concerned.
All right, but there's lots happening when it comes to the commodity as well as crude prices as well. And when we look at the crude prices, firstly, then that's trading absolutely flat, no significant change. But yes, of course, traders are monitoring the Iran tensions and the likely move on that because of that, if that could weigh heavy on the crude prices. But along with that, what we're getting to see is that the gold prices, just overnight, we were seeing a bit of a pressure coming in on the gold prices. That, of course, is ahead of the US job and inflation numbers. But as of now, gold is trading higher, close to that $5,069 per ounce mark, as well as silver. That is also inched higher by more than 1% as we speak. US 10-year yields will also seem to be falling after the retail sales missed expectations. So that's something that we are tracking closely as well.
All right, so that's where the commodities are at. But starting with the top global stories then, the Commerce Department has just released the retail sales report. Consumer spending slowed sharply during the December holiday shopping season, pressured by rough weather, tariff impacts and persistently high inflation. Retail sales were unchanged in December, following a 0.6% increase in the month of November. Excluding auto sales, spending was also flat, missing forecasts for a 0.3% gain, signaling broader softness in the consumer demand. On a yearly basis, retail sales rose 2.4%. Sales excluding autos increased 3.3% on a year-on-year basis in December, highlighting an uneven momentum heading into the new year.
All right. In some of the other global stories, it was Wall Street that was seen to be facing another bout of volatility as investor concerns over artificial intelligence extend beyond tech stocks and into financial services, following the last week's steep sell-off in global software equities, driven by fears that AI tools could upend the traditional business models. The focus now shifted to brokerage and wealth management names. Now, shares of major U.S. broker-dealers stumbled sharply after a startup rolled out an AI-powered tax planning tool, stoking worries that artificial intelligence could automate the core functions once the preserve of human advisors take into place.
And Ford Motors' quarterly earnings missed the Wall Street expectations as the automaker grappled with the higher costs and ongoing challenges in the electric vehicle business. Ford reported a fourth quarter core profit of about $1 billion, roughly half of what it had earned previously. The Ford recorded an $11 billion net loss for the quarter, including substantial write-downs in its EV unit. Ford's full-year results also showed a loss, reflecting the heavy drag from the electric vehicle investments and supply disruptions throughout 2025.
And in one of the Hollywood's most dramatic corporate battles, the bid for Warner Brothers Discovery is entering a decisive phase, with Paramount inching closer to a potential deal, but still stopping short of a knockout pitch. Now, according to the analyst, Paramount has sweetened its offer for Warner Brothers Discovery, attempting to make its proposal more attractive to the shareholders without materially raising the headline prices. Now, Netflix's competing offer is still seen as cleaner and more compelling, even though it carries its own regulatory risk.
And in the later on the Epstein case, U.S. Commerce Secretary Howard Lutnick found himself in the political hot seat after testifying before a Senate subcommittee about his past ties to Jeffrey Epstein. Lutnick confirmed under oath that he visited Epstein's private Caribbean island, Little St. James, in 2012. Years after Epstein was convicted in 2008. He said the gathering occurred while he was on a family vacation with his wife and their 4 children and 2 nannies and involved only an hour-long lunch with Epstein.
And in a fresh diplomatic flashpoint, U.S. Trade Representative Jamieson Greer has said that India has started reducing its purchase of Russian oil and is stepping up imports of American energy and other sources. Now, Greer said that the shift comes as a part of a broader negotiations between New Delhi and Washington and reflects India's gradual upwinding of its heavy reliance on Russian crude. Now, Greer signaled toward a strategic pivot amid evolving global energy and trade dynamics.
And in a big step towards normalization of ties between India and China, Foreign Secretary Vikram Misri held the India-China Strategic Dialogue with Executive Vice Foreign Minister of China. The high-level Chinese delegation is in India to participate in the BRICS Shipra meeting. Sumita Karir is now joining us with the details.
This is a significant and important development that's happened between India and China because Foreign Secretary Vikram Misri, he held the India-China Strategic Dialogue with his counterpart, the Executive Vice Foreign Minister of China. And in fact, the Chinese Vice Foreign Minister, he is in India to participate in the BRICS Sherpa meeting that started. In fact, it goes on from 8th till the 10th of February. Now, what was discussed between both the sides? Well, the two sides discussed and exchanged views on issues covering bilateral, regional and international affairs. And the talks focused on the recent progress that's been made as far as stabilizing of ties and relations between both sides is concerned, on the boundary issue as well. In fact, both sides underscored the importance of peace and tranquility on border areas and overall progress that they have seen. In fact, the Foreign Secretary also noted the resumption of the Kailash Mansarovar Yatra. Remember, that happened last year. And that really marked a big turn as far as India-China ties are concerned. And Foreign Secretary also hoped for continuous expansion of the scale of the Yatra as well. And of course, we've also seen when this meeting happened, we've also seen commentary come in from India, China's ambassador to India, Shu Feihong, who has tweeted on X, who has posted on X that they have the full support. The China is extending its full support to India as far as its BRICS leadership is concerned.
All right, but with this, viewers, time now to slip into a very short break. Don't go anywhere.
How the Asian markets have opened up. Well, Asian markets have opened up in the green. Well, they're shrugging off the entire AI fear and the weak economic data on Wall Street that has been spoken to U.S. investors, and at least the U.S. Retail sales report has showed that consumer spending has been flat, but the Asian markets are shrugging that off right now, and they're also waiting for China's inflation data to come out. But for now, Shanghai is the only one that's trading very, very flat right now with cuts of just 3 odd points, but Nikkei is trading up 2%, in fact more than 2%. Remember, Nikkei has been on a tear since the induction of Takeshi as the Prime Minister, and post that Nikkei has seen no stopping. That's trading up 2%. Kospi is also trading up 0.5%. Hang Seng trading up 0.2%, and S&P ASX 200 is also trading up 1.2 odd percent. As far as Gift Nifty is concerned, that is also implying a positive start for India. 86 points uptick. That's what we are penciling in for Nifty today.
All right, so that's about the cues that we are watching. But let's take a look at how the Indian markets fled just yesterday, where Nifty did close at that 25,900 level, a little higher from those levels, while the banks lagged. But even the mid and the small cap, those basket and buckets, they were seen to be outperforming. Let me take it across to Snehi for the market wrap.
Well, yes, overall, good day of trade and second consecutive day of gains coming in for the market. You had the Nifty that shut shop at 25,935 with an uptick of about 0.2%, and the Sensex also saw similar moves of about 0.2%, and the Sensex also saw similar moves. 84,273 is where we shut shop on the Sensex too. On the Nifty front, Eternal top Nifty gain, a very solid gain, 5.25% uptick on Eternal. Tata Steel continued its rally for a second straight day in a row after posting good set of earnings, 3% uptick further on Tata Steel. ONGC, Bajaj Auto, M&M, Power Grid, Tech Mahindra, these were your top Nifty Nifty gainers. On the flip side, some pressure on HCL Tech, Bajaj Finance, Dr. Reddy, Shriram Finance and Bharti Airtel. These made up the list of the top Nifty losers. But talking about the broader end of the market, then better moves from the mid-cap and the small-cap space, slightly better than seen on the benchmarks. The Nifty mid-cap was higher by about 0.5%. Nifty small-cap was also higher by about 0.4%. Sectorally, it was the day of the auto stocks, and the auto index also did very well for itself. It was up about 1.5%. Names like Samil on the back of good earnings up 4%. Tube Investment, MRF, Bajaj Auto, Ashok Leyland, M&M, Bharat Forge, all of them did very well. And following that, you had names like metals, consumption, realty, IT, energy, services, FMCG, PSU banks, and of course the top losing sector was Nifty Pharma. And some names from that space were deep under pressure, one of them being Aurobindo Pharma on the back of poor results, 6.5% cut over there. From the broader end, names like Sterlite Tech, Edelweiss Finance on the back of that investment announcement, Sun TV, JM Financial, Amberent on the back of numbers, Tatacom all did well. On the flip side, Aurobindo, Suprajit Engineering, Welspun Living, Embassy, Naveen Fluorine, Zydus Life and Web of Global, along with some of the textile stocks on the US-Bangladesh tariff news, were under pressure. So that's the way the market wrapped up for the trading session. Second straight day of gains coming in, and we've shut shop above the 25,900 mark.
All right, moving on from there to the stocks that are going to be in focus. Let's get on board. My colleague Mitali is joining us with all the stocks and news. Mitali, take it away.
All right, so talking about the stocks and news, we have a few stocks to watch on the back of corporate earnings for Q3 that they have presented. Starting with Grasim Industries, which reported a mixed set of numbers for Q3, but improving their standalone performance. First, taking to the revenue, it increased nearly 28.5%, but also the company reported a net loss of 174 crore rupees for Q3. EBITDA rose sharply by 77%, taking to 479 crores, while their margins also expanded by around 126 basis points, indicating operational improvement despite the bottom line pressure that has been seen in Q3. Moving next to Torrent Power, which delivered a strong profitability in this quarter. Revenue rose modestly by 4.3%, but their EBITDA margins expanded sharply by 358 basis points to 20.7%. Net profit surged 35%, aided by best cost control and also the operating efficiency. Next, we have Britannia Industries posting steady consolidated numbers for Q3. Revenue increased by 8.2%, while the profit grew nearly 17% for this quarter. The EBITDA margins improved by 133 basis points, coming to 19.7%, reflecting easing input costs and also improved pricing discipline. Also, we have United Breweries displaying their numbers, which reported a strong set of numbers for Q3. The net revenue increased by 3.7% on a yearly basis, while the EBITDA margins expanded sharply to 10.9% from the earlier 7.1%, and profit more than doubled to 81 crores compared to 38.4 crores last year. Lastly, taking you to Som Distilleries, company posted a weak consolidated performance for this quarter. The net revenue declined nearly 16% on a yearly basis, while the EBITDA also dropped 47.8% to 19 crore rupees for this quarter. Also, the EBITDA margins, they contracted significantly to 7.6% from the earlier of 12.2%. So these are some stocks for you to watch on the back of corporate earnings.
All right, thank you so much, Mithali, for getting us all those details. But there are a lot many other stocks which you should be watching out for in today's trading session. And for that list, let me take it across to Rabinder, who is standing by with the list of counters to watch out today. Rabinder.
Well, yes, Aether Energy can be in focus on the back of their block deal, where as per sources, Aether's holders will sold as much as 7.3 million shares via block deals and shares offered at 705.7 to 727.5. So back of this block deal, Aether Energy can be in focus. Keep an eye on Tata Motors, where Indonesian subsidiary has won its largest ever overseas order of 70,000 vehicles from a state-owned entity. So back of this order win, these stocks can be in focus. Bharat Heavy Electronic can be in focus, where government will sell a 3% stake in Bharat Heavy Electronic via OFS at a floor price of 254 per share, with an additional green shoe option of 2%. And apart from this, company has received a LOA worth of rupees 2,800 crore for a syngas purification plant project in Odisha. So back of this, Bharat Heavy Electronic can be in focus. On the back of order win, Pace Digitech can be in focus, where company has secured secured an order of rupees 1,775 crore renewable energy project from KREDL at Pavagadh Solar Park. So back of this, these stocks can be in focus. Another stock that can be in focus on the back of that order win is Iron Exchange, where company has back order of rupees 1,730 crore from Petroleum Development Oman. So back of this, these stocks can be in focus. And lastly, from the pharma space, Aurobindo Pharma can be in focus, where a company has received Form 483 with 9 observations from the US FDA for the company's unit for the company's facility in Telangana. So back of this, Aurobindo Pharma can be in focus.
So thank you so much, Ravinder, for joining us with all the stocks that we need to watch out for. But let's get on both Snehi with all the cues that you need to keep on your radar. Snehi, take us through all the cues we need to watch out for today.
Well, yes, lots of cues to watch out for. Not much happening back home into other than earnings. We'll get to that. But globally from the US, watch out for non-farm payrolls, jobless rates and the federal budget balance. Some important macro indicators to track. From China, the inflation print in the form of PPI and CPI will be out, so keep a close eye there too. Japan markets are going to be closed on account of a public holiday, so truncated week for Japan. In terms of global earnings, watch out for some major names like McDonald's, Shopify, Total Energies. These are going to be in focus. But shifting focus back home and taking you through some of the earnings that we are going to be eyeing very closely. M&M is going to be one of the nifty companies. In fact, the only nifty company that will come out with its earnings, so watch out for that. Other than that, other names like Amara Raja, Max Financial, you have Technocraft, Avanti Feed, Divi's Labs, Yatra Online, Godrej Industries, Mrs. Bector Foods, Lenskart Solutions, among more companies that are going to be coming out with their earnings, so watch out for that too. In terms of corporate action and board meetings, it's going to be the stock of SJVN to watch out for, because other than its earnings, along with that, the board is also going to be mulling fundraising. In terms of the primary market, it's going to be the last day to subscribe to the IPOs of Fractal Analytics and iFinance if you haven't done so. Both of those IPOs will be closing at the end of the day. And lastly, in terms of other events, watch out for the speech from Vice Chair of Supervision, Michelle Bowman. She's going to be speaking at an event, and OPEC is also going to be releasing its monthly oil market outlook report. So watch out for all of these cues very carefully.
All right, so watch out for these events. Let's move on to an ET Now exclusive. Then Commerce and Industry Minister Piyush Goyal will hold a meeting with representatives of export promotion councils and industry associations today. My colleague Sumita is now joining us with the details of that.
That's right. We're given to understand that Minister Piyush Goyal is all set to hold a meeting with representatives of EPCs, export promotion councils and industry associations this evening. This is going to be the first meeting that the Commerce and Industry Minister is holding after the finalization of the US and EU trade pacts. In fact, exporters were eagerly awaiting the trade deal, particularly with the United States, to be sealed, and so that these 50% elevated tariffs, they could be put on the side. So discussions are likely on the interim framework implementation, on when the finalization of deal will happen and when the signing of deal is likely to happen. In fact, exporters are also expected to see clarity on Russian oil purchase policy of India and how that is going to impact their exports overall. There will be discussions likely on the impact of this tariff reduction. Of course, there's going to be an exchange between the minister and these EPC representatives. Remember, the United States and India issued a joint statement earlier this week. They also issued a framework to interim agreement as far as the trade deal is concerned, wherein the United States agreed to reduce 25% reciprocal tariffs to 18%. But before that, it agreed to eliminate the punitive 25% oil tariffs on India, which were imposed in August 2025. Remember, the US is the largest export destination for labor-intensive sectors. So, of course, this comes as a huge relief for those in these labor-intensive sectors. Now, there's another trade agreement which got finalized, and that is the EU-India FTA. India and the EU, they concluded their negotiations for an FTA on January 27th, 2026, and that pact is expected to be signed later this year. It may come into force in 2027. So, of course, there's going to be discussions on that as well, and how both of these pacts are going to be good for exporters.
All right, thank you so much, Sumita, for getting us all those details. But Indian government has released a gazetted notification on rules for social media platforms for AI content. Social media platforms have been directed to clearly label the AI-generated content and ensure that such synthetic material carries embedded identifiers. Now, under the rules, companies are barred from permitting AI-generated content involving child sexual abuse or material that is obscene, vulgar, or sexually explicit. Now, let me once again take it across to Sumita, who is joining us with more details. Sumita, over to you.
This is an important notification, an important Gazette notification that's come in from the Ministry of Electronics. In fact, wherein the government has directed platforms to label AI content, and in fact, they must deploy checks on misuse. And this is according to the official order that's been released. In fact, this is, remember, part of the IT Rules 2021. They were amended to regulate synthetic digital content or AI, and that includes deepfakes. Now, as part of this stricter enforcement mechanism, if you go through the order, it categorically states that the government has set a 3-hour deadline for social media companies to take down AI-generated content once it's been flagged by the government. And that could be a challenge for social media companies and intermediaries like X, Meta, and others. This time specificity that's been mentioned as part of this order, that within this window of 3 hours, such content needs to be removed from these platforms. While definitely it's great for cracking down on deepfakes and AI-generated misinformation, but compliance and how these companies follow through on such order, on this specification, that remains to be seen. What else is part of the order? Well, the companies will now be required to deploy automated tools to detect and prevent the circulation of illegal, sexually exploitative AI-generated content. In fact, platforms have also been asked to even warn users about the consequences of violating rules that are related to AI misuse. And in fact, they should be sending warnings to users every 3 months, and so that they know what that users can't share or post AI generated content. In fact, platforms cannot allow removal of tampering of SGI labels or provenance metadata. What this essentially means is that AI related content, it should have specified specific indicators that it is AI content. Now, in case of audio files, there should be something that should be part of that content, and visually, if it's a picture or a video, that should be part of that visually to sort of demarcate it as AI generated content.
Right, and to talk about AI disruption, we were earlier joined by the founder of Cred, Kunal Shah. Here's a small snippet of that conversation.
First of all, if founders are themselves not leaning in and building stuff using AI and practicing it with, they will always imagine this technology to be something alien and have doubts about its deficiencies versus its potential. For example, I asked ChatGPT once or Gemini once and it made some error and then I did not use it again, is not going to be a great argument, because these technologies are changing every week. So what if anybody has used ChatGPT a year and a half ago to what they are seeing as quality of answers to that is dramatic and exponentially changing, and the exponential curve is going to keep increasing, right? So we are entering a world where we will be able to get many things done effectively. But if you do not know yourself, another interesting thing is the average age that naturally feels proficient with AI is going to be younger, right? So sometimes having organizations with senior people trying to lead the AI revolution may be counterintuitive and counterproductive, right? So therefore, how do you constantly bring people with beginners mindset? It's natural in young people and very rare in senior people. But if you can put beginners mindset people to kind of lead the AI charge, things will change. Third thing is that one should not think about AI only for using for, how do I improve my customer support or how do I improve my operations? You need to think about AI for everything. How do I use AI to improve my interview process, my appraisal process, my financial audits, my compliance? Everything that your business is materially reliant on has to be thought through first from an AI lens now. Now, coming to what founders should be doing is keeping up. The world is changing too quickly, and their organization is not going to be able to tell them how the world is changing. Strategically, all the choices, for example, many businesses will become irrelevant if the founders are not realizing the second, third order effect of the AI technology that is coming over, right? For example, if more people, let's say more people are going to rely on AI to make a purchasing decision, you need to have a strategy that how will you be preferred by AI as a product or a service of preference when consumers are going to ask AI to make a decision for them, right? Another example of that is every household will have a younger person who will leverage AI to make key decisions for the family. For example, as you're trying to buy a property, and the kid will say, oh, let me analyze this property using this and tell you what the rent yield, all of that stuff, and give you an AI report of that. If you are not able to do that, you will struggle. If you're a doctor, every patient is going to do an AI research and come and ask you different kind of questions. If you just discount that behavior, you may not be preferred as a doctor. Or, instead of that, if you leveraged AI, you will be able to kind of give them a much better comforting answer when they are in a high anxious state. So my view of this is that every founder needs to rethink.
All right, but with this, viewers, it's once again time to slip into a very short break. Don't go anywhere. We'll be right back on the other side.
Now exclusive then from me, Javeri's term as a trustee to Sir Dorabji Tata Trust ends as of today, and former Citibank's top boss did not seek any reappointment. My colleague Anurag Joshi is joining us with more details of this story.
Pramit Javeri's term as a trustee of Sir Dorabji Tata Trust ends today. Javeri, a former Citi India CEO, had written to Tata Trust Chairman Noel Tata recently expressing his wish not to seek a reappointment as a trustee of Sir Dorabji Tata Trust. The development comes ahead of a key board meeting of Sir Ratan Tata Trust, in which one of the key proposals is likely to be the appointment of Neville Tata as a trustee on the board of that trust. So Neville Tata and Bhaskar Bhatt, a former MD of Titan Company, were appointed as directors as trustees of Sir Dorabji Tata Trust in November for a period of 3 years. If Neville Tata is appointed as a trustee on the board of Sir Ratan Tata Trust, in addition to his current role as a trustee on Sir Dorabji Tata Trust, this move is seen as strengthening the position of Noel Tata within the Tata Group. The Tata Trusts own about 66% equity stake in Tata Sons, which is India's biggest business group.
Thank you so much, Anurag, for getting us all those details. But today, all eyes will be on select counters on the back of MSCI rejig, because AB Capital and L&T Finance shares have been added to the MSCI Global Standard Index as a part of their February index review, while IRCTC has been excluded. Let me take it across to Ravinder, who is joining us with more details and also tell us what sort of an inflows or outflows rather we can expect. Ravinder.
Well, yes, in MSCI February 2026, Rejig 2 new stock will be added in the index, while one will be excluded. AB Capital and L&T Finance will be included, while IRCTC will be excluded from the index. And post this Rejig, India's weight in the MSCI Standard Index will remain steady at 14.1%, and the total number of represented companies will increase from 164 to 165. And as per Nuvama Alternative, Aditya Birla Capital is expected to see an inflow of about $257 million, while L&T Finance could attract of inflow of $238 million, while IRCTC is expected to face outflow of $142 million, and AU Small Finance Bank is estimated to see inflow of around $172 million following the weight increase in the AU Small Finance AU Small Finance Bank. And there are other also several changes in the small cap index. As the small cap universe remain under pressure, the index will see over a dozen exclusion in India, with the stock count reducing from 508 to 480 post the Rejig, and multiple Indian stock that have been included, Premier Energies, NSDL, Emcure Pharma, JSW Cement, Ashapura Minicam, Canada, HSBC Life, and Thyroid Technologies. And on the other hand, the small cap index recorded a large number of exclusion from the Indias. This include L&T Finance, Gokaldas Exports, Sterlite Technologies, Kiana Construction, Ashoka Buildcoin, Kaveri Seed, Zagal Prepaid, Ocean, and Symphony. And the adjustment will take place on the 27th February 2026.
All right. Thank you so much, Ravinder, for getting us all those details. So let's watch out for that. But along with that, a whole host of earnings that you should be watching out for in today's trading session. And firstly, let's start with Apollo Hospitals. And this time around, we have seen an inline set coming in by the company, though the revenue was a tad bit higher versus our estimate. But look at the margin performance. 14.9 is what the company has clocked in line to what we were expecting, though there is an impact of 19 crores on the back of the new labor code norms. But yes, Apollo Hospitals did come out with a decent set, and all across the board we have seen a good set rather coming in by the company, wherein with respect to the occupancy level, that was at 69%. The management has been clocking in occupancy of close to 69 or 70 odd percent, but this time 67% is what they have clocked in. With respect to Apollo Health and Lifestyle, the revenue has seen a jump of 20%, while the EBITDA margin was steady at 10.2 odd percent. Apollo Health Co as well, where the profit was seen higher at 87 crores. The company has been really working on to increase the occupancies, add more stores, and seems like they are on track for that. And with respect to Apollo 24/7, now the GMV stands at 525 crores. That's seen a jump of 28% on a YY basis. So let's watch out for Apollo Hospital in today's trading session. But other than that, Eicher Motors also came out with its numbers, and really a very good set coming in by Eicher Motors, because yes, of course, the revenue has seen a very good jump, but it's the margin profile as well that has done well for the company, because do remember, Eicher Motors volumes were supported, but this time around the margins were expected to be flat. But on the actual numbers, it's a jump of 128 basis points on a YY basis. The Royal Enfield sales were up 21%. VECV registered a growth of 24% in the volume front. But look at the commentary as well. The company is very much confident that going ahead, they will continue the demand momentum, the sales momentum in the quarters ahead. Q4 demand momentum is seen to be strong, with higher inquiries expected, better conversions and healthy bookings is what the management is highlighting. The premium motorcycle segment is also expected to outperform, and so is the international business for the company. With respect to VECV, they are highlighting the fact that they continue to dominate the market share. With respect to the overseas market, Bangladesh and Nepal has been doing very well. But along with that, the company has also announced for a capex of 958 crores, and this will help them rise their annual capacity to 20 lakh units from 14.6 lakhs units specifically for Royal Enfield. Now let's talk about M&M then, because from the auto space and within the Nifty earnings today, all eyes are going to be on M&M, and let's quickly tell you what we really are expecting with respect to the M&M numbers. So the company is expected to see a good double-digit growth in this time around as well. Revenue is expected to see a jump of 30%. EBITDA expected to see a growth of 34%, while the profit is expected at 4,047 crores. But this time around, to remember that there could be a higher component of Q3 other income that is expected to get a boost on the back of the RBL stake sale. There will be one more adjustment with respect to the new labor codes. So we will factor in and try to get the adjusted profit numbers like we have been doing for rest of the companies. With respect to the mix, then there has been a 6% increase in the automotive segment ASP. That is what is likely due to the higher mix of EVs and a richer trim level mix. With respect to the auto EBIT margins, they are also expected at 9.4%, while with respect to the tractor EBIT margins, they are also expected to inch higher to 20.3%. So let's watch out for M&M in trade today. So these were a whole host of earnings that we will be watching out for. But moving on to an ET Now exclusive then. And we caught up with Peter Schiff, who is the Chief Economist and Global Strategist at Euro Pacific Asset Management, who highlighted that the ongoing dollar weakness, rising US debt and capital flight from American assets are likely to keep the gold rallying. Let's go across and listen into his take.
Well, I think gold's going to continue to move higher, especially now that the U.S. dollar is moving lower against its fiat counterparts. In fact, I expect pronounced U.S. dollar weakness throughout the rest of this year. and for many years to come. So all of that is going to drive more money out of U.S. dollars and U.S. financial assets like treasuries into gold and other non-U.S. dollar denominated investments.
All right, we're moving on to another big voice, and Ajay Srivastava, who is the MD of Dimensions Corporate Financial Services, believes that exchange stocks will perform well along with telecom and autos. What else he's bullish on? Let's go across and listen into that.
Select monopoly companies in this country are going to do very well. Stock exchange is the biggest sector, which is a pure monopoly, is going to do extremely well. Telecom does well in portion, but he's going to be patient with it. I think he's reaching a point of good inflection, and if they move to data center, etc., I think you will have a good mix of them. So if you look at telecom, if you look at your stock exchanges, if you look at auto companies, fantastically doing well, performing well, exporting well. So I think these three sectors will continue to command. Whether consumer companies come back into reckoning, I do not know the answer to that one, because the valuations are not crazy. Absolutely, we are India values retail companies selling kapadas at a piece of God knows what kind of AI companies. So I'm not too sure about our retail companies at this point of time. How will they fare up in the year? But the sector we did well last year, we should do well this year. Same goes for banks, autos, healthcare. It's just the same thing. I think as we get older, we realize nothing much changes in the world.
All right, and we also caught up with Sandeep Tandon, who's the CIO of Quant Mutual Fund, on his views on the pharma plays after the India-US deal got finalized. Apart from that, which sectors is he keeping on his radar? Let's go across and listen into that as well.
Carnage was there actually in the mid and small space. They have actually corrected with low volume. So it's not like we have seen extraordinary selling happening in these names, and hence you see the correction. I think correction was largely, as I said, the volume completely disappeared. So these stocks have fallen not from a selling pressure, but from lack of buying perspective. And there's lack of buying, with the participation comes down significantly, impact cost moves up, and obviously you see a bigger impact. I think that is slightly reversing. A ray of hope is coming back. I think people have started looking into some of these beaten down names also. I think there is a value in these names. So one has to be clear in terms of identify some of these names which has potential to move up significantly from the current level. But I'm not expecting any spark sort of thing move happening immediately. But the way I look at it will be constructive background is there even for the small and mid cap space, particularly for the small cap.
How do you look at earnings from for mid caps and small caps? Has it been pretty much in line or better than the large caps?
So it's frankly speaking, it was not about the earnings. The earning disappointment in the mid and small was not that meaningful. It was more from a sentiments. Sentiment damage was far bigger than the earning impact. And that has played out. That's the point which I'm trying to highlight. I think that is the trend which is now reversing, and it looks slightly more constructive now. And hence, we look for opportunity to participate rather than living with a negative mindset, nothing will happen and let's lie low. I think that phase has changed, and I think people should take advantage of that opportunity, which is quite visible now.
Hi, morning. Getting into your sectoral views, you've been ever the bull on the pharma space. And now that we have a little bit more clarity on the US-India trade deal, wherein India generics and the entire pharma space has been completely exempt, does this increase your conviction on the pharma space? Are you looking at making fresh entries here in some stocks that you maybe did not have weightage in the past?
See, we have been constructive on pharma, but they have not performed up to that extent. Okay. As I said in the beginning, it was more of a psychological game where people were slightly irritated or disturbed or not clear about the how it play out. So any sort of uncertainty which was there, I think that is settling down. So I'm remaining very constructive on this space, particularly on the generic side. Okay, now with the multiple deal also getting signed, it's nothing to do with the pharma. I said they were actually exempt also, but it's a more of a psychological relief that these companies, overseas companies, will be more comfortable dealing with the Indian companies, given the treaty background which is played out, and not only in US and even in other country. I think background is constructive. I think and earnings disappointment is not there up to that extent in pharma, and if you leave the few names, but broadly numbers are pretty decent. So I'm remaining a long-term bull in this space.
If you look at the Indian IT, it's pretty much on the receiving end because of the AI trade or anti-AI trade in India, which is happening. Do you see IT companies being able to change the business models, re-gear themselves for AI-led services going forward, and flows coming back into India from an IT point of view?
See, what we have to understand that yes, there is no debate that we have missed that opportunity from the AI tool perspective or product point of view. What is very important even to implement some of these things, currently the IT services companies, some of these companies have potential to become a AI enabler. Somebody has to adapt these processes also and these tools, which has to be customized, which means that some of the existing IT company will do the needful. So I am not very negative from the current level. In fact, I will look for a buying opportunity at appropriate time, not necessary at this moment, but at some levels, these theses will start getting built that these companies are now emerging as a AI enabler or adapter rather than saying that just a IT services.
Is it about valuations? Is it about timing where IT companies are concerned? Because you make a very interesting point that at some point they are bound to come, there's bound to be better clarity that it's very difficult to play AI without some of these large IT companies, right? Now, I'm not asking you for names, but is it a time correction? Is it a price correction that you're looking at? And if so, is it maybe 10% more from here? I'm just trying to get a ballpark hint of how much of a correction are you looking at in terms of what it could mean from a buying opportunity perspective?
So frankly speaking, it is very difficult to pinpoint. We are not a guy who talks about particular levels specifically. We believe in inflection point. So extreme inflection point, which is very difficult to project that inflection point will come 10% lower or 8% lower. Okay. As and when it happens, we will tend to participate. As of now, those inflection points have not reached. So which means some more correction and maybe more correction in terms of time also is still there. Appropriate time, but you cannot be short at these names. You cannot, one has to look for opportunity. So you can't have a background in your head, where you are extremely bearish, then you will miss out this opportunity. So you have to settle down that negativity is behind us. At appropriate time, these stocks will also become some meaningful addition to your portfolio. But that's the approach we are approaching with this sector.
And well, before we wrap up this edition, let's take stock of how the Asian markets are faring at this juncture. Asian markets have opened up in the green. In fact, they're continuing their rally despite the AI fears and the weak economic data that has come out from the USG. Like I mentioned, US retail sales, the consumer spending was rather flat, missing the 0.4% estimate monthly gain that the economists from Dow Jones were expecting. Now, as also we are waiting for the latest data that's coming out from China, the latest inflation data that is likely to come out from China, the consumer price index that is supposed to be rising 0.2% in January from a year earlier in China, and that's below the forecast estimates that that we were penciling in of a 0.4% increase by Reuters poll. That's a sign of continued deflationary pressure in the absence of a stronger stimulus. So that's the word coming in as far as the Chinese inflation data is concerned. And as of now, if you look at the markets, Shanghai is trading down 1.9%. 1.9 points, very, very flat moves coming in from China. Hang Seng Index is turned absolutely flat. In fact, remember, it has opened in the positive, but that has slipped into the red, but very flat, absolutely. Just 0.3% downtick is what we see coming in on Hang Seng Index. Kospi, that's trading up more than 0.5%, 0.6% uptick coming in on Kospi. And remember, Nikkei is shut today, and Nikkei, though, has been on a winning streak from the last 2 trading sessions. But with that, it's a wrap on this edition of Market Cafe. I'll take your leave. Thank you so much for tuning in. Don't go anywhere. The market is coming up next.